We are live, sir.
Yeah.
Okay, good to go, Chairman. Shall we?
Yeah, please.
Yeah. Good afternoon, dear members. Today we have a VCM on Union Budget 21, also coupled with the other details, that is the filing of the GSTR-9 and 9C. Now we had a detailed macro analysis last week, and the VCM on direct taxes proposals almost 2 weeks before. Now, today's VCM will be focusing on these changes and this definitely this filing of this 9C and 9, which is around the corner. Now, the topic is being handled by a very expert faculty from Ernakulam, CA SOMAN. Now, on screen, definitely we have our newly elected chairman of Trichure branch, CA RNKK, and chairing the session along with very dynamic new secretary, CA Jean Paul. Now, assisting CA Soman NL, his partner, CA Bibin, is there on the screen. Now, also the senior partner of their firm, CA Rajashekaran, will be joining shortly. Both are very accomplished teachers, and they will be supporting CA Soman by giving their views also. Now, before moving on to the webinar, dear attendees, please make use of that Q&A link in the application for typing in your queries. The same will be addressed in the Q&A session after the presentation. Over to you, Chairman, for the welcome speech.
Thanks, Vice Chairman C. Ajit Kaiman. Good afternoon to all members. Our faculty of the CA Soman CA, his supporting faculties, CA Bibin Joseph, CA Rajashekaran sir, other senior members and members attending the seminar. Welcome to the seminar on key highlights of changes under GST in budget 2021 and vital aspects of GSTR-9 and 9C for the year 1920. This is our fourth seminar of this year. Before coming to the seminar, one information which I need to pass on to all members. Our new officer bearers took charge on 16 February 2021. Last year, the installation function of previous chairman and other office bearers, we could not do much after that. Physical activities or seminars we could not do, but we have done a lot of virtual seminars. So now we have, as a physical class, we have started for repeaters batch, a small batch. We are just starting with the physical classes, and based upon these COVID issues and its restrictions, we will be thinking of starting other seminars as well. This office bearers function of installation will be conducting on 2nd March evening. So I request all the members to join for that. We will be sending the formal invitation, and we will be communicating personally also all the members. Thank you. Regarding today's seminar, Finance Bill 2021 is presented on 1st February 2021 by the Finance Minister Srimati Nirmala Sitharaman with various amendments in direct and indirect taxes. We had a seminar on direct taxes during first week of this month, which we have already mentioned. Certain changes in indirect taxes proposed in the budget are the budget. Some of the provisions they have brought it from the beginning of with effect from 1st July 2017. See, regarding this input tax credit, earlier people used to take input credit based upon the invoices and everything. Now that scenario is changed. It becomes like a debit card. If you have the balance in your account, then only you can use it. Some other provision which directly affecting our profession is that one, the 9C audit not become mandatory now onwards. Up to 1920 only, it's mandatory. After that, it is not mandatory for certain professions. And also they have so far, while making the payment, if we are not paying the interest, it was not effective. Now, interest element also will be coming while making the payment. So in all this, we just want to know why these amendments brought in and how it is going to affect our profession and what are the responsibilities to our members while doing this scenario, how to conduct our audit and everything. Today, we have a learned member from Ernakulam with his partners. He's totally dedicated, he and his partners totally dedicated to the subject as trainers, faculties, speakers, invigilators. They have contributed articles on indirect taxes as well. And on behalf of the committee and all members attending the seminar, let me welcome CA SOMAN CL and CA Bibin Joseph, CA Rajashekharan to this seminar. I also welcome all the members to the seminar. For formal introduction of the faculty, let me invite our Vice Chairman, CA Ajit Kaimal. Over to you, Vice Chairman. It's not audible, Ajit. Vice Chairman.
Yes. Thank you, Arun sir, for the opportunity.
Yeah.
Good evening, members, once again. Now, today's faculty is the convener of the study group for goods and service tax for the state of Kerala. The team is part of the GST training program of ICA, involved in preparation of training material, suggestions on the model GST law, and imparting training to various stakeholders, including licensing with the state government officials. He has qualified for the IDT certification course of ICA, and is also an invigilator for the faculty development program of ICA. He is also the coordinator for IDT course of ICA at Ernakulam branch. He had undergone the 2 days trainees program of ICA. He was working with Bharat Petroleum Corporation as a senior manager at Kochi Refinery, and presently handling the taxation and accounting aspects of those contract for the mega expansion projects at Kochi Refinery. Now, he has handled excise, customs, import and export, service tax, SEZ, foreign trade policy matters, and the adjudication process in indirect tax during the last 18 years of experience in the petroleum sector. He is also the module leader for SAP indirect tax implementation in Kochi Refinery. Apart from the same, he is a very regular speaker in study circle meetings at the Ernakulam branch and other branches of ICA in Kerala, and has the Aluvai Chartered Accountants Association and also Trichur branch. Now, he is a faculty for the training program of ICA for the excise commissionerate officers, and also Ernakulam branch of SARC for the indirect tax papers. Now, he had also contributed lots of articles in the Tax India Online journal and the Ernakulam newsletter also. Now, with these words, I would like to introduce our key speaker of today's session, CA SOMAN NL. I would also like to mention that getting an indirect tax expert, and that too during these peak reporting times, is very difficult. But I must mention that CA SOMAN CL agreed readily. On a personal note, I would like to thank him also. Over to you, Chairman.
Thank you, Vice Chairman. Sir, now, SOMAN sir, please,
yes.
We can start the session. Thank you, sir.
Yes, sir. Thank you, Arun sir. Thank you, Ajit, C. Ajit, and Secretary C. John Paul sir, for giving this opportunity to me for speaking to the learned members of the Trichur branch. We have been there at Trichur branch for many times in connection with so many seminars, which we recollect it very passionately. Because of this particular season only, we were not able to meet each other. Still, we cherish the memories. We used to come there for each and every budget day, and whenever there are changes in the indirect taxes with regard to taxation, that returns, etc.
Yeah.
So a very good interactive session we were able to gather from there. And we also learned a lot from the learned members of the Trichur branch. And we are thankful for this opportunity then and also right now. Along with me, Mr. Bibin Joseph and our senior partner, Mr. Rajshekharan, are also here. They will also interact in case there is a discussion which needs their intervention also. Bibin will be explaining the matters related to, or rather the changes related to the GSTR-9, our annual return for the current year, that is 1920. And the 9C audit report, that is a reconciliation statement. Specifically, he is an expert there in that area. He will be able to make use of his practical expertise in settling or in discussing the matters concerned with that. And one small correction in the introductory part. I think I have been working with the BPCL. Presently, I left BPCL and I am now partner in Rajshekharan and Matthew Ernakulam. Anyway, we were all together working for the last so many years, but now officially I became the partner in Rajshekharan and Matthew.
Okay.
That is one new thing. Yes, right. Other things remain the same. Right. Quickly, we will go to the session. That is the subject matter of the day. We are given, I think we are given 2 hours. Yeah, 3 to 5 is the official time. And if some necessity arises, we are prepared to stay by, but we do not know whether people attending the seminar may find it convenient for. Yeah, right. Anyway, that's okay. We will divide that, share the available time. 1 hour we will devote for the budgetary changes in respect of indirect taxes, and the balance time we will use for the 9 and 9C, because that is the most crucial thing which everybody has to find out a time for that. And it is expected that there will not be, rather we expect that there will be some extension of the due date from February 28th to next possible available time, but so far no information has come, so everybody must be engaged in filing the GSTR-9 annual return for the current year. Okay, so we have to make use of the recent changes in that area also during this time. We'll go to the this aspect, that is changes in the budget which in respect of the indirect taxes. Yes, not so many changes are being brought into that area, but whatever has been done is enough for us to discuss for the full day. Because though there are only a few clauses concerning the changes, that is, the finance bill has only 99 to 114 clauses. That is, clause number 99 to clause number 114 are relevant for the indirect taxes changes. Only 16 clauses. But if you look at the finance bill, there is a very clear indication that even though these clauses are introduced and proposed, they shall come into force only on such date as the central government may by notification in the official gazette. So we have to wait for the notification for getting a correct picture, or the procedure especially. Even though these are all proposed, we have to wait for the one second. We have to wait for the notification, because it is specifically mentioned in the finance bill that government has to issue separate notifications in the official gazette for putting into effect each and every clause which has come up in the finance bill. First one, we will take not on a sequence basis. We are not going on a sequential manner, but the priority wise, we have to see on a random basis. Clause number 108 is the very important thing as far as we are concerned. Clause number 108, which mentions about the changes in the detention, seizure, and release of goods in transit. So it says that clause 108, if you look at the section per se, section 129, the first section itself says that notwithstanding anything contained in this act, because 129 has been made it as an all-inclusive package section, notwithstanding anything contained in this act, where any person transports any goods or stores any goods while they are in transit, during the course of transportation, or when they are stored in some other places, especially when stored in the godown of the transporter, goods transport agency. If anything has been viewed as contravening the provisions of the Act and rules, then the officer is empowered to take into custody, or rather he can go to the extent of detaining the goods and seizing the goods. So that was the earlier provision. I am sure that all of us would have faced this situation. Most of us would have faced this situation, because a lot of disputes have arisen during the last 1 year, and even high courts have interfered in that. High courts have also interfered and said that with the flimsy reasons, the officer, if they are detaining the vehicle and causing hindrance to the free movement of the goods, the reasons, if they are not covered under section 129, the detention of the vehicle and the seizing of the goods are not as per the law. So High Court has interfered, and some orders, in fact, a copy, the order very specifically mentions that this should be brought to the notice of the people who are at the lower end in the department. So it has been issued as a direction to the topic, that is the commissioner, to educate the people who are doing the work. So that much of nuisance have been faced by us, by the transporters, during the last 1 year. And now, if we look at the provisions of the current budget, we can see that the matters related to the indirect tax are more on a punishing nature, penalty nature, than on making it easy for the business. Why that a step has been resorted to? Probably maybe because of the nuances in the field of transportation of the goods. So confiscation of goods based on irrelevant matters also has been on an increase in the last few months. Over and above that, because of this change in this particular section, what impact it is causing to the free movement of the goods, let us just examine. That is, as far as I know, this is one of the most important aspects, important changes everybody should be aware of, to take care of. Let us see what was the existing position where the changes have taken place. First section itself says that the circumstances in which goods can be detained or seized. Below that, it says that this detained goods can be released upon doing certain things. What was that? On payment of applicable tax and penalty equal to 100%. So applicable tax and a penalty which is equivalent to 100% of the tax payable on such goods. That means tax plus 100% of tax as penalty. If the owner comes forward, that is where the owner comes forward and pays this amount, that is the tax as well as the penalty equivalent to the tax, he could have taken back the goods. That clause has been amended. Actually, it is substituted. Let us see what is that substitution. It says on payment of the penalty. Now the applicable tax has been removed from the clause. the particular clause says applicable tax and penalty. Now it says it is on the basis of payment of the penalty only. So whatever we pay as consideration for releasing the material will be termed as penalty only. What is that penalty? That penalty is equal to 200% of the tax payable. So tax payable is there, 200% of the taxpayer. As a mathematician, there is no dispute. He was earlier paying 100 plus 100, 200%, but the nomenclature only has changed. Will it make any difference in our scenario? That is the thing we'll have to look into. So instead of applicable tax and penalty, the word penalty only has now been brought into. So applicable tax has been done away with. There are many reasons for doing away with that terminology. We will come to that a little later after presenting this particular section. Let us see what is the change now. Change is the applicable tax terminology has been taken away, and the amount collected is in terms of penalty only. And that too, amount did not change 200%. Second clause was that, earlier the second clause was that the percentage on payment of the applicable tax and penalty, that is when the person does not come forward and pay the tax. Two situations. One is the owner declares that this is my property, I am willing to pay this much amount. So let me get the material released. That is one aspect, one situation. Second situation speaks about the owner, that particular event of owner not turning up. He is not claiming that this is not the property. This is his property. He is not claiming that this is belonging to him. Nobody turns up. Then what is the position that the officer is going to take? He will, after that, nobody is coming forward. Then he has to dispose of the material. And on payment of the applicable tax and penalty equal to 50% of the value of the goods. Earlier, applicable tax and 100% of the penalty. So 100% of the tax is penalty. Here, applicable tax and penalty equal to 50% of the value. That is the difference. Value. Say 1 lakh rupees is the value, 18% is the tax. If any that is tax is payable, 18, that is 18,000 rupees tax and 18,000 rupees penalty was the amount payable under first clause. Here in second case, applicable tax and the penalty itself is coming to 50,000 rupees because 50% of the value of the goods will be charged as penalty, of course, reduced by the tax amount payable thereon. That was the situation. If the person is not coming, the owner is not coming, so anybody comes and pay this amount, then he could have taken that material back. That is second aspect. How is it now changed? Substituted as on payment of penalty equal to 50%. So here there is no question of any tax payable, but it is only penalty again. In the second clause also it is penalty. The quantity is 50% of the value of the goods or 200% of the tax payable on such goods, whichever is higher. So two options are there. See the differences. Earlier, applicable tax and penalty equal to 50% of the tax. From that, the applicable tax amount will be reduced. So ultimately, we will be paying 50% of the value as the total amount. Here, the change is 50% remains the same. 50% of the value of the goods remains as payable, but not as tax, but as penalty. Again, another clause also has been introduced to take the higher of the second option, that is 200% of the tax payable. In nutshell, 200% of the tax payable or 50% of the value of the goods, whichever is higher shall be paid as again penalty in the situation. So that is a change. The tax payable is 200% of the tax amount, but paid as penalty. What is the implication of that particular change? Let us see. Then the third clause, let us see the difference, that is what the change over that. Only thing is that as a common layman, we will say that the terminology only has been changed. Applicable tax has been removed and tax and penalty earlier now replaced with the penalty. That's all. Is it the only thing? Let us see after a few moments. We'll go to the other areas also. After that, we'll come back on that. The third clause, there are only 3 clauses in section 129, subsection 1. The third clause is that it is related to filing a security or a bond for the value calculated under clauses A and B above, A or B above. So we could have filed a security or submitted or furnished a security or a bank guarantee or a security like that. We did not have paid the amount as such. We could have released the material based on that security, furnishing of bond and the necessary amount towards security. That section is retained, that particular clause is retained in the new scenario also. But if we move further on that, we can see that filing a security and releasing provisionally based on a bond is done away with also. So what is the implication of that? Again, maybe they are planning to, the government may be planning to prescribe further procedures that we will be able to know only at a later point of time, when the rules are also getting changed in accordance with the section, that is the finance bill, when it gets passed on and it becomes an act. Subsequently, corresponding changes also may be required in the prescribed rules. So this particular clause has not been touched upon right now. Instead, other clauses have been changed. What all are the other clauses? So in the first section, the only change is that instead of tax amount, we call it as penalty, and the quantum of penalty remains the same for that matter. Then the second clause, that is subsection 2, it says that the provisions of section 67 subsection 6, that is relating to the procedure of taking detention, seizure of goods, etc., which was happening, which was mentioned in section 67 subsection 6, was applicable equally in section 129. In this case also, the same procedure was applicable. That section has been deleted. So reading these two things together, let us see, when section 67 subsection 6, which was dealing with the execution of a bond and furnishing a security for the clearance of the goods, instead of paying the tax amount and the penalty, what the intention of the law is that they may be prescribing some other procedure, if at all that provisional release is permitted. As of now, provisional release of the goods is not permitted. That is, 129 has been made as a standalone section. It has withdrawn, it has been delinked from all other sections, and it is now an independent section which is dealing with the seizure and the disposal of also. Disposal on payment of the amount, no bond, no provisional disposal based on security, as of now is available. So what we will do, we will have to pay the entire amount, that is 200% of the tax amount, or as the case may be 50% of the value, as the consideration for releasing the material. No question of any bond execution. That is the first thing. So section 1 and subsection 2, subsection 1 and subsection 2 are thus dealing with a drastic change in the scenario of detention, seizure, and release of the goods. Now, moving to subsection 3 of section 129, the proper officer has to do certain things. That was the existing provision. Proper officer shall issue a notice specifying the tax amount and the penalty amount. He has to issue a notice. That section has been, subsection has been modified, giving a due date, mandatory time period prescribed for issuing this notice and doing the finalization work. What is that? He has to issue a notice within 7 days of such detention. Within 7 days only, not working days. It is 7 days. We do not know what exactly is that 7 days when the concerned provisions in rule comes. Probably maybe working days. As of now, it is Act says that it is only 7 days of such detention. He has to issue a notice. Within another 7 days, that within a period of 7 days from the date of service of notice, another 7 days, he has to pass an order. So two things. Earlier, he has only been informing about the tax and penalty required to be paid or discharged under clause A, B, or C, as the case may be. Now the avenues are closed. Only two things are allowed there. That is, under clause A and clause B, pay the amount and take the material. Bonding is not there. Execution of a bond is not there. Now, time period is also specified. Within 7 days of detention, a notice has to be issued, and thereafter, within another 7 days, an order has to be passed. Okay. And what will be the impact of that order? That is, now we know that MOV, that is, since there is no specific rules for the transit goods detention and the procedure, circular has been issued specifying certain documents to be issued each and every time. In that circular, they are talking about, or it is mentioned that MOV 01 to 011, MOV 01 to 11. These documents are to be issued at each interval, at each point of time. Here, MOV 07 was the document which is specifying the requirement, that is the amount to be paid. And an MOV 09 order shall also be passed based on that notice. And within a period of 7 days, these things shall be done right now. Within a period, that is confirming the order. Confirm the order, finalize the thing. It is a standalone section, finalized, and it is not leaving the other people to take over from that time. Still, that 129 1C, that is the furnishing of a bond and a security, that section is not touched. Just bear in mind that also. Coming to, that is the third thing is that the order shall be passed within almost 14 days of the detention. Sixth subsection. Earlier it was that if the payment is made within 14 days, the determined tax amount and the penalty as provided in subsection 1 is paid within 14 days, then he could have taken the material back. Material and the conveyance will be released. But now, if it is not taken by the owner, then it will go to the confiscation procedures prescribed under section 130. So there is a stop over there from 129 to 130. That was the original position. Look at the amended portion right now. It is saying that where the person transporting any goods or the owner of such goods fails to pay the amount of penalty under subsection 1, because hereafter it is penalty only, there is no tax amount. That penalty amount, if nobody is coming up and paying the amount, within 15 days, we are given only 15 days from the date of receipt of the copy of the order, that is the MOV 09. The goods or the conveyance or detained shall be seized and disposed of otherwise, or disposed of. That means the proper officer has got every right to dispose of or sale. The word used shall be liable to be sold or disposed of otherwise. Sold and realize the amount in such manner and within such time as may be prescribed. So some procedure rule will come later on to recover the penalty payable under subsection 3. Look at the seriousness of the new amendment. A goods vehicle can be caught or detained for any reason, because first section says that if there is any contravention of any of the provisions of this act or the rules, contravention there does not specifically mention these are only contraventions. It does not say like that. Any provision can be termed as a contravention. Okay, so leaving that area, If the officer says that there is a contravention, then he can pass an order. Within 15 days, everything can be closed. Everything will be closed at the disposal of the officer. Moreover, this is another new proviso introduced in that section 129.6, that the conveyance can be released on payment of an amount. Conveyance, the owner of the transport vehicle, the transporter can release the vehicle only upon payment of an amount. What is that amount? Penalty under subsection 3 already described, or rupees 1 lakh, whichever is less. So an amount shall be paid by the transporter for giving the transport vehicle carrying the goods. So for giving that conveyance facility, and that conveyance has been detained in between without the knowledge, if the owner wants to get back his conveyance, that is his vehicle, then he also shall pay an amount. What is that amount? A penalty amount. If it is less than 1 lakh rupees, okay, pay the penalty amount, go off. Otherwise 1 lakh rupees, that is lesser of the two amounts, shall be paid. Will it be over and above the tax payable by the owner? As of now, we come to understand that since this is an additional proviso which was not there in the earlier section, we can only say that this will be an additional thing. So what is the amount payable if a vehicle is caught in between with the improper documentation or some clerical error happened in the documentation accompanying the vehicle? 200% of the tax amount, normal situation, as penalty, and 1 lakh rupees for the vehicle, or the double amount of another amount of, that is 3 times penalty, 3 times taxable amount may be the amount that should be payable by the owner along with the transporter for releasing the material. Is it a flexible movement? Is a good sign of doing business? Is a good sign of our meeting with the constitutional provisions of free transportation of goods, right to transport the goods freely? Look into, we will see. So the ultimate thing is that this amendment in 129, we have come to the end of that amendments in 129. 129 has been made a standalone section dealing in the proceedings for the disposal of the material as well as the goods, which was earlier done by section 130 under the head confiscation of goods and conveyances. That has now become standalone. So 130 is not for this kind of transactions. Section 130 confiscation of goods is now centering only on other confiscations, search and seizures, etc. No way connected with the transportation of goods. Then now we have, at the beginning I said that what all are the other aspects, impacts of this amendment. Very serious amendment, very penalizing amendment. Let us see what all are. The constitutional validity of levying the tax under 129 also was challenged earlier. Why? Because by virtue of section 129, we have seen that a tax amount is payable along with the penalty. This time also, when a vehicle is detained, the officer can again tax the same goods which has already undergone a taxation while issuing the invoice. So people have challenged that, saying that it is a double taxation which is beyond the constitutional powers. So many cases, litigations are now prevailing, are now there in high courts. Several high courts have taken it and said that this is a double taxation. So do away with that. Probably that may be one of the intentions, to take away that word tax, instead added that amount also into penalty. Then what is the impact of that adding word penalty in the section? How we are going to affect? The customers are going to affect, the traders, the suppliers are going to affect. Second point is important. Penalty shall be paid in cash only, not by input tax credit. We cannot make the payment of the penalty by way of using the input tax credit. So if it is a penalty, no question of using input tax credit. shall be paid in cash. 200% or whatever be the penalty amount assessed by, ordered by the proper officer should be paid in cash. Very important thing. Then there is no provisional release of the goods by furnishing a bank guarantee and security. That section has been taken away. Subsection 2 has been taken away. That is, the confiscation proceedings are specified in section 67, subsection 6, which was earlier happening in 129 mutatis mutandis. As is various condition, that clause has been removed. Now it has, 129 has its own release formalities. If at all it comes through the rules which are expected. We do not know whether a lenient view will be taken by the authorities. Fourth point is, under section 129(3), the officer must issue a notice within 7 days, pass an order also within 7 days. That order now comes as a penalty order. There is no question of any other reasonable order. It is a penalty order. He has nothing to do more. He can only just obey whatever thing said in the section. So he will say 200% of the tax amount is charged as penalty. Of course, giving an opportunity of being heard. What for? It is a absurd clause. An opportunity of being heard is of no use. He will fix the amount as 200% because there is no choice for the officer. He can only fix the amount. It is not at the mercy of or the leniency of the officer. He has to pass an order as per the provision. Fifth point is that the penalty must be paid within 15 days because if no payment is coming up within that 15 days, the officer is empowered to dispose of. He shall dispose of. He shall sell the goods and the conveyance probably, because it says together, the goods as well as the conveyance can be disposed of within 15 days. Are we getting a time to go in appeal, which was earlier available for us? Are we doubtful? Because if the officer disposes of, what for we can appeal against? It's a question. Another point, the conveyance or that means the vehicle can be released only on payment of an amount, which is 1 lakh rupees or the penalty amount, whichever is less. So there is also a cost for releasing the vehicle. Next one, appeal is allowed, but upon pre-deposit of 25%. There is a provision for appealing. What for appealing? That is also a question. Reading together all these aspects. But appeal is still there because 107 section, there is a clear amendment there. We will come to that section, that is 107, section 107, appellate proceedings. From there, we can read that appeal is allowed. But there is a pre-deposit associated with each appeal. What was that pre-deposit and what is the present deposit? We will have a comparative study in the next slide. Now, a pre-deposit has been enhanced from 10% to 25% of the penalty of the amount finalized at the first stage. And at the second stage, that is at the appellate tribunal stage, additional penalty shall also be paid additionally. That is not mentioned here, but the clause remains as such in 107 and 112, section 112. The second appeal also attracts a pre-deposit. Now, in the first appeal level, the pre-deposit is 10%, from 10%, it has been enhanced to 25%. That's all we can right now point out. 25% has been made as the pre-deposit. Since it is a penalty clause, we have to pay the amount in cash, pre-deposit in cash. Then the time period for appeal now reduced to 15 days, literally. Reading the lines, reading the provision, we can say that within 15 days, if we are not acting judiciously, the officer can dispose of the material or sell the material. So the time available for us to act quickly is 15 days. When it is 90 days for the other appeals, we, as per the normal appealable time, 90 days. That is not available for 129 cases. Then, as far as the mistakes that may happen in the documentation, there may be minor errors, clerical mistakes, or having some small negligible errors. For that also, they can charge as a no violation of the provisions. Normally, we are now also seeing that classification, valuation, and the rate disputes also are being taken by the officer as violating provisions. We all know that classification and valuation and dispute and rate disputes shall be taken at national level only. No officer can take the ground as a reason for detaining the goods. Still, they say that it is violation of the provisions. So any violation of the provisions, any small clerical mistake, any mistake in putting the dispatch station and the, this destination station in the e-way bill. We have so many cases like that. The destination and the originating places interchanged in the document in the e-way bill only. The invoice when generated correctly, but that was also termed as a violation of the provisions and the goods were detained. So that can still happen. Then next one is the reasonableness of the levy of penalty is not the power of the officer. He cannot do that. We have seen he cannot do that. It is a negligible or the reasonableness cannot be exercised at all. Then last point, free movement of the goods as a constitutional right may get disturbed due to these minor clerical and innocent mistakes. That goes without saying. If everything mentioned in these clauses take place in the way it is written in the amended provisions, then we cannot escape. We cannot move the goods. And the person who has genuinely strictly followed the procedures, who has never a mistake, he has not been a history of any mistakes happened in earlier period, a genuine taxpayer may find it very difficult to move the goods because of any small discrepancy in the documentation. So they have no other choice but to go in challenging the free movement of goods in that as per the constitution right. So this is all about the changes in section 129. Now we can see what is the gravity. This is only just highlighting the few points. Provisions, I request every person to go deep into these sections, the amendments, and find out, that means learn, understand the importance of that particular section, the changes they are now planning to bring in. It is a penalizing provision. It is not it's not an easygoing section. Stringent provisions are there, just like what we have heard in certain other countries, not in India. They are very strict in exercising the punishments. So department also has come up, or government is also planning to come up with that sort of punishments in the near future in case there is a mistake in the documents which accompany the goods transported. That is totally, when we say collectively, transportation of the goods shall be with the proper documents, and any mistake in the documentation will be termed as a violent one. That is a grave one for exercising the penalties proposed in 129, section 129. Now 130 has been linked with, dealing with the 129. Let us quickly go to that 130 also, that it has been made applicable for the remaining sections, remaining provisions of the Act. 129 has no way, need to go to 130. So it was a notwithstanding clause earlier. 130 it is an standalone clause earlier. Now it has been substituted as, instead of notwithstanding, where. That is notwithstanding anything contained in this Act. If at all if at all something different is said there, this particular section was applicable earlier. Now it has been done away with, and it says that where it has been made as a simple section here to deal with other kinds of detentions, searches and detentions. So that standalone status has been done away with. Then in 130, there was a confiscation fine instead of confiscating the goods and disposing of the goods, the owner or any person comes out and says that I'm prepared to pay the fine in lieu of confiscation. In lieu of confiscation, he is prepared to give a fine. Then he could have taken back the material as well as the conveyance. Now, what is the change here? That section, the subsection itself has been withdrawn. That is, there is no more fine in lieu of confiscation, because 130 is not dealing with the confiscation of goods, in transit goods. It is a subject matter of 129. So there is no fine in lieu of confiscation also. So 130 is also made simple, but 129 has been made more stringent. There is no question of any fine in lieu of confiscation. Then coming to the appeal portion. Just now we have mentioned that a new section, that is new proviso, has been introduced in 107, that is appeal section. 107 is the appeal section, especially in 107(6), that is the pre-deposit requirement. It was saying that pre-deposit, as mentioned, as prescribed, shall be made. That is, earlier it was 10% and 20% respectively. Now a new proviso has been introduced saying that no appeal shall be filed against an order under subsection 3 of section 129 unless a sum equal to 25% of the penalty has been paid by the appellant. So, as I said earlier, the pre-deposit has been, for this particular situation, for detention cases of goods, the pre-deposit is not to 10%, but it is 25%. 25%. Okay. This is an example. Earlier, let us see what was the situation prevailing pre-budget. Suppose the tax amount was 280 crores, penalty was also 280 crores, equal amount as penalty. Total payment was 560 crores, say. After that, the penalty, the tax amount has been taken away, but the amount remains the same, 200% of the tax amount. So far, so good, no issue. The pre-deposit required for filing an appeal earlier under 107 subsection 6 at the first appellate level, it was 10% of the tax in dispute. What was the tax amount in dispute? 280 crores. So 10% of the tax was 28 crores or a maximum of rupees 25 crores. No question of any pre-deposit in case of penalty. That was the situation. 10% of the tax. So maximum he need to pay only 25 crores in place of a dispute of 560 crores. That is, he has to go in appeal by remitting 25 crores rupees for filing an appeal against 560 demand, 280 tax and 280 penalty. Changed to 25% of the penalty. Now, what is the penalty amount? 560 amount, 560 crores itself. There is no question of any tax. So both has been brought as penalty. And the rate has been changed from, enhanced from 10 to 25%. Then what will be the amount? 140. There is no limit for that maximum amount as available in other case, in other situations. Here the maximum amount, there is no limit. So 140 crores. So 25 crores in the example, it will go to 140 crores. See the difference. Then second appeal, the same amount we are going to file in the second appeal, that is GST Appellate Tribunal. 112 subsection 8 deals with additional amount of pre-deposit. So apart from 10%, we have to pay 20% of the tax in dispute. They are also tax in dispute. Or maximum 50 crores. That is not changing. They have not touched upon. If we look at the finance bill, nothing is mentioned about a second appeal situation, that is 112 subsection 8. Will that be continuing again? So apart from 140 crores, will it be, can we take that, will it be continuing for second appeal level, or can we say that there is no pre-deposit required? That is too much, no? No pre-deposit required, because it says that 20% the tax in dispute. Since there is no tax in dispute, somebody can say that there is only penalty in dispute. I don't have any tax dispute, so I am not supposed to pay the or remit the 20%. That is one aspect. Second, saying that the same thing continues. So if we want to go in appeal for second time, tax in dispute is not, it's not done away with, but the tax amount is there. So you have to pay 20% of that also, maybe another version. So we have to be prepared for these two. Anyway, because of the enhancement of from 10% to 25% at least, the amount has substantially increased. So where is the question of other second appeal? Think seriously and think about the implication. If a small mistake has happened in the document and the value and the rate of tax is substantial, what will be the impact? Okay, that is all about the appeal section. Then section 83, there is a change. There, attachment. People who are associated with the person who committed fraud. The person who has committed fraud is liable for giving his property to the government. That means the government can attach the property provisionally, including the bank account. That was the earlier provision. So, and a person who is associated with that will also get a blow. But there is also a twist in the applicability of the section. This particular subsection has been redrafted, saying that after initiation of any proceedings under chapter, it is not specifically saying sections. Earlier it was section 62, section 63, both are in same chapter. Section 62, 64 in same chapter. 67 in another chapter. 73 and 74 was in third chapter. And picking certain sections only, that provisional attachment was enforced. But right now, for all the acts of that sections coming under that particular chapter, the entire chapter, just like our Hanumanji has picked up the mountain in his hands, the entire thing, he was not able to locate the medicine. So he picked up that, that mountain itself and brought to the God. Yeah, that's Rama. Then, like that is a situation here. Instead of choosing that sections, now the entire chapter has been brought under review. That is, the commissioner is of opinion that if anything has gone wrong in protecting the interest of the revenue, he can attach the properties. What all are those chapters? Any assessment chapters? Anything that is items coming under that 12, 14 and 15 of the Act. And the person also is liable for a attachment. He is also, his property also, the person who is helping, person specified in section 122. What is 122? 122 is a person who retains the benefit of a transaction covered under clauses 1, etc., 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 and who has kept that benefit also. That person is also liable. That person is also has to undergo the ceasing provisions, that is attachment provisions. Chapter 12, it is assessment. Chapter 14 is inspection, search and seizure. Battery, just. Okay, then assessment, search and seizure, and chapter 15 is demand and recovery. So till the expiry of a period of 1 year from the date of provisional order, everything can be caught under their control. That is, can be seized and kept under the control of the department. The commissioner is empowered for provisional attachment. That is also another serious section. What is not serious, I am not able to say. All these are serious sections. They're coming to a new explanation in 75. That is, when a fraud is alleged against a person, there are certain general things to be looked into. There is a new explanation coming in there, which is, for the purpose of this subsection, the expression self-assessed tax shall include the tax payable in respect of details of outward supplies furnished in section 37, but not included in section 39. New section has come. Earlier, fraud is exercised or fraud is termed as fraud only when self-assessed tax is not paid. Where we are paying self-assessed tax? Through what media? 3B. 3B is coming under section 39. So only section 39 irregularity was termed as non-payment of the self-assessed tax. Not only that right now. Now, if a person files GSTR-9 and does not file GSTR-3B, that will also be termed as self-assessed tax. That is violation, non-payment of self-assessed tax. Moreover, if there is a change in the GSTR-1 with respect to or the figure shown in 3B, so we may take a casual approach while filing the GSTR-1 because it is under section 37 GSTR-1. No amount is payable there, but payable amount is determined only, no amount is paid there. While filing the 3B, 20th of subsequent, that is on 20th day, if something went wrong in GSTR-1, we could correct in 3B while making the actual payment. That is not possible now, hereafter. Whatever we file in 37, that is as GSTR-1, will be termed as a self-assessed tax. And if there is a short payment, that is either a short payment or a non-payment, that will be treated as fraudulent exercise, coming under 75 subsection 12. 74 provision can be exercised. While exercising section 74, the general provisions relating to determination of tax were guided by section 75. In 75 subsection 12, self-assessment tax is defined. Now another explanation has been brought there, saying GSTR-1 is also tax payable and any short payment will be treated as. Next point is section 74, fraudulent activity. Now, fraudulent activity dealings. Existing explanation was having section 129 and 130 as sections. Irregularity therein will be treated as fraudulent under section 74. Now, no more question of any 129 and 130. That has been taken away. Section 129 and 130 has been delinked. And the 125 actually it is 130. It is delinked. So 129 and 130 has been delinked. But it only says 122 and 25 are remaining. Remaining only are saying 73 and 74 deals with 122 and 125. Earlier, apart from 122 and 125, 129 and 130 were also there. Now it is limited to 122 and 125. Other things we are dealing in 129 only. Right. Okay. Then the interest portion. Interest. These are all expected thing, made retrospective change amendment with effect from 1st July 2017 also. This has been brought back. We all were looking for this change. This is a welcome measure so far we have seen. That is only a small change in the nomenclature. That is, instead of shall be levied, now it is saying payable. Interest shall be levied. Interest shall be levied. That means somebody will levy. Now we say we are voluntarily paying, shall be payable. And that has been changed to which. That only is the ornamental change. That's all. But impact is that it is made effective retrospectively. What was that impact? Charging interest on the net tax payable. That is the cash payment. Leaving apart the, we have been longing for this particular change for so many years. That is from very beginning itself, we have been looking for this change. We have received notices also for that, including the notices were taking the total tax payable. That is the liability totally they were taking into consideration for charging the interest. And in September, even after the GST Council's recommendation and the so many recommendations from various other sources, government was not willing to put it retrospectively, this particular clause. No change was therein, no notification was there for making it retrospective 1/7/2017. Now section 50 subsection 1 has been made retrospectively. It's a very good new thing has been brought in. Finally, that issue is now settled. Okay. Now our bread and butter, section 44. We all know what was there earlier, 44 subsection 1. Okay, I'm not touching upon that. Then 44 subsection 2, again, it should have been a new, that is reconciliation statement should be enclosed along with the GSTR-9. So audit was made mandatory as per section 35 subsection 5. That 35 subsection 5 has been taken away. So audit requirement is not there. That is a, to that extent, 44 has been modified. That's all. 44, section 44 has been modified. And what is that modification? Audit requirement is not there, but every registered, the modification is, substitution is this one only. Registered person other than the so-called exempted category, which may include self, that is, they shall furnish an annual return. So there is no relief from furnishing annual return and a certified, self-certified reconciliation statement. So there is no dilution of the work for the taxpayer. He has to furnish a self-certified reconciliation statement reconciling the values of the suppliers declared in the return and audited financial statements. So audited financial statement will be there. 9, he will have to file. He also has to prepare the reconciliation statement, make a self-certification, file it. That's all. So the need for audit has been taken away. There are certain other things here also we'll have to see. What is the implication? You would have heard of so many things about the withdrawal of the 9C, 9 and 9C. Out of that discussions, it was said that audit is, it's not giving any value addition. It has not located, as per the statistics, there was not much addition of revenue on account of the audit. Those things were the allegations. We are not going into that. But we can say that audit was a conclusive proof that the matters went correctly. The things were going on smoothly. Accounts and the business was running on a strategic or the seamless manner. It's on a faithful way. But now that audit is done away with means they may be planning something else. Let us not spend our time on that for discussion. The result was, the change in 44 was as a result of the omission of section 35 subsection 1, which mandated audit of accounts by either a chartered accountant or a cost accountant. Removed that. But for 1920, we all know the due date is far reaching. Okay. Then the input tax credit availment and the additional provision included therein. Section 16, we know section 16(2), the conditions required for taking the input tax credit. There should be an invoice, goods should have been received, then the tax should have been paid by the supplier, and we also should have filed the return under section 39. These were the provisions. In subsection 2, that is, of section 16, a new clause after clause A, that is after the receipt, first clause was in respect of the invoice requirement, that there should be an invoice with us. B, clause number B was, we should have received the goods or the services. In between, a new clause has been inserted as AA. What is that? Details of the invoice or the debit note referred to in clause A. Whatever invoice we have in hand, the details of that invoice should have been furnished by the supplier in a statement of outward supplies, and such details have been communicated to the recipient of such invoice in the manner specified in section 37. What is specified in section 37? GSTR-1. GSTR-1, the supplier shall upload, give all the details of his outward supplies in GSTR-1. What will happen once GSTR-1 is filed? It will come to a 2A, the recipient's 2A. So this particular section mandates, new clause mandates that for availing the input tax credit for the recipient, there should be an entry into A. There should be an entry into A. Rest, I am leaving it to you. Right. There are 5%, 10%, 20%, all these percentages of availing input tax credit over and above the 2A was specified earlier. Once passing on this finance bill and raising or issuing a notification, this thing will become a reality. That whatever input tax credit eligibility will be determined based on the 2A figures. That is our comment on that. Doing away with all the other statutory things. Because of the scarcity of time, I am quickly passing on. The section 7, there is a change, clause number 99. Instead of taking sequentially from 99 to 114, why I have chosen from the back end is that the priority is on section 129 and the other sections we have already dealt with. The seriousness is on that sections. Taking as new proviso or a new clause in supply doesn't matter. What was that new clause in the supply? The activities or transactions by a person other than an individual. So person includes, look at the definition of person in the act. Person includes individual, HUF, association, body of corporates, natural persons, artificial persons, so many things. Whoever all are available below the sky are coming under the category person. Out of that, other than an individual also can make a supply. This clause says that activities or transactions by a person, anybody from that group, other than an individual. Okay, what is that activity? Giving something to its members or transaction to its members or constituents or vice versa for cash deferred payment or other valuable consideration. We know what for it is. It is for charging the club and associations, which the supplies of which were disputed and clarified by Supreme Court also, judged by Supreme Courts also, that mutuality exists. Person cannot supply to himself. That, to rule out that, to overrule that particular judgment, unsettle the settled law, this clause has been brought in. Hereafter, there is no dispute, there is nothing to be worried about in disputing the supplies by the club to its associates, to its members, or vice versa. Club is also a person, individuals are also. Now this clause says that they are mutually existing or not, mutuality is there or not, they are two different persons, they should be touched in between. For that, there is a supply rising, and the majority of the major associations, all these associations have to come under the tax net. Moreover, this has been made retrospectively. So two things have been made retrospectively, that interest and the supply definition. So what will happen to the settled positions based on the Supreme Court judgment and the settled positions? What will happen if it is made retrospectively? Only time will say. Schedule 7, Schedule 2 and Para 7. Schedule 2 means once it is defined as a supply, whether it is a supply of goods or supply of services only need to be distinguished from Schedule 2. There, as a consequence of the amendment in supply, as a consequence of the introduction of this particular new clause in supply sections 171, this has been taken away. That is, this particular clause has been deleted from the Schedule 2. So no requirement of keeping that there. So that has been taken away. That is only a Schedule 2 change. Last, so almost all changes from 99 to 113, only two are left out there. That is information, calling for information under section 151 and 152, and the power of the commissioner under 168 or the powers. These two, there are some ornamental changes there. There has been made more, giving more coverage to the commissioner to seek information. Those things are there. That is not that much important. So I am leaving that two clauses. Otherwise, section clauses 99 to 113 is there. One particular section only is getting changed in IGST Act. So that is none other than the zero-rated supply. Zero-rated supplies to SEZ and exports coming under section 16(1) of IGST Act. New provision has been introduced. Existing provision is there. Now the new provision is supply of goods or service or both for authorized operations. That was missing earlier. What is that authorized operation? The SEZ has its own rules and regulations. it has its own controlling body. So at the beginning of every financial year, the units in or the developers or the units in the SEZ area shall get their operations certified by the board at the SEZ. So that board will certify that these are required for the authorized operations. A list of items are there. More than 65 items are given as examples. Earlier also we were finding it difficult to advise the client, saying that it should be that is the SEZ exemption is available only if it is authorized. But how can a person supply to an SEZ from the domestic tariff area if it is not, a supply is not coming under one of the authorized operations of that particular SEZ? Anyway, that has been carrying on. Only thing, when the officer stationed there authorizes the invoice, we could have taken the view that it is already accepted and we can take all the refunds and the input tax credit benefits also. Now it has been made mandatory that the supplies shall be for supplies from domestic tariff area shall be for authorized operations of the SEZ. Authorized operations has been brought into. It's a nice new clarity has been brought into. Then other small changes are also there in the manner in which ITC is refunded, etc. Look at those finance. The finance bill can be discussed there. We ourselves can look into. So it is time for us to go into the most important area, the GSTR-9 and changes in GSTR-9C. Though we are doing away with the 9C, audit is only not required. 9C is not required, but reconciliation is required. It should be certified by the assessee, and we are sure that the assessee have to take the professional advice from the learned people only for making the changes. We also know that we ourselves are finding it difficult to find. We ourselves are finding it most difficult to plug the columns there in 9 and 9C. So if our situation is like that, we can imagine what will be the poor taxpayer is going to do with the 9 and 9C. I am just leaving the floor open for a discussion, and time permits, we will look into the other aspects also in depth. For the time being, let me take leave, and I thank the learned members of the Trichure branch for listening me. I am sure that there will be questions. I hope that we can take the questions as a last item once we cover 9 and 9C. For that, I am leaving the platform to Mr. Bibin, who is my colleague there. Over to you, sir, for just permission to giving permission to Mr. Bibin.
Thank you, sir.
Thank you so much,
for a wonderful presentation. Now requesting Bibin Joseph sir to start the session on practical aspects of GSTR-9 and 9C for the year 2019 and 20. Over to you, sir.
Okay. Thank you, SOMAN, sir.
Yeah, I will close.
I take this opportunity to thank the ICA Trichure branch for giving me an opportunity. Today's topic is the changes in Form 9 and 9C for the financial year 2019-20. As you all know, the earlier notification 56/2019 of Central Tax dated 14th November 2019 gives some relaxations for filling the Form 9 and 9C for the financial year 2017-18 as well as 2018-19. Whether that relaxation is continuing for the financial year 19-20 also. Yes, that is continuing. I will give you the presentation and the last part of this presentation. In the year 2019-20, notification 79/2020 dated 15th/10/2020 was inserted as a 12th amendment to CGC rule. There is a changes of relating to Form 9 for the financial year 19-20 is dealt with. First of all, insertion of point number 2A in the insertion part of Form 9. After the form, there are some insertions starting serial number 1, 2, 3 and goes on. After the serial number 2, a 2A is inserted. What is it? In the table, against the serial number 4, 5, 6 and 7, the taxpayer shall report the values pertaining to the financial only. The values pertaining to the preceding financial shall not be reported here. What is table number 4? Details of advances, inward supplies and outward supplies on which tax is payable. Table number 5 is details of outward supplies on which tax is not payable. 6 deals with the details of ITC available during the financial year. 7 talks about details of reversal of the ITC. All these tables, taxpayer shall report values pertaining to the financial year only, that is 2019-20. The values pertaining to the preceding financial year, that is 18-19, shall not be reported here. Whether any clarity reached in reporting these figures? Of course, there is a positive side also and also a negative side. First of all, we go to the positive side. The newly inserted point number 2A make it clear that current year figures are only reported. This now clears the ambiguity with regards to reporting of previous year figures in table number 4, 5 in Form 9. I tell that this clears the ambiguity in table number 4 and 5 only, since there is a very much confusion that I will discuss coming. Coming with an example. In 2019-20 GSTR-9, CGST and SGST payable for the 19-20 disclosed in table number 3.1 is 1 lakh rupees. And CGST and SGST payable for the 18-19 also paid in 3B, 3.19 is 50,000. Total liability they are paid in 1,50,000. Then coming to the Form 9, how we fill the figure. You all know this is a B2C, then figure is coming in table number 4A of Form 9. That is 1 lakh rupees. In table number 9, this tax paid column is auto-populated and the figure is 1,50,000. That is 1 lakh relating to current year and 50,000 relating to the previous year 18-19. What about this 50,000? 50,000 paid relating to the previous financial 18-19 shall not be reported in current year Form 9 as per the insertions. Some of them are taking this figure in 4A and total comes to 1,50,000 and make the column in table number 4 tallies with 1,50,000. Now it is very clear that this 50,000 relating to the previous year shall not be reported in current year Form 9 2019-20. Any issue? The first issue is regarding reverse charge liability for the financial year 18-19 paid in financial 19-20, not at all reported in the annual return 18-19 and 19-20. Before that, I need your kind attention on the CBSE press release dated 3rd July 2019. What is the issue in that? Many taxpayers have requested for clarification on the appropriate column or table in which tax which was to be paid on reverse charge basis for the financial 18-19, but was paid in the financial 19-20. The liability relating to the 18-19 paid in 19-20. Where is the column for disclosing this? The clarification also given. It may be noted that since the payment was made during the financial year 19-20, the input tax credit would have been availed in 19-20. So this liability should be disclosed in the financial year 19-20. If there is any variation in the calculation of the turnover, it should be reported in reconciliation statement. So in the financial year 18-19, based on this press release, you are not disclosing the reverse charge liability for the financial year 18-19. Coming to this year, based on these 2A instructions, they are clearly given that liability for the current financial year only reported. So this liability relating to the previous year. So this year also you cannot report this figure, reverse charge liability. As a result, this reverse charge liability of the financial year 18-19 paid in 19-20 are not at all reported in 18-19 and 19-20 Form 9. Any issues in Form 9C? For the financial 19-20, since the RCA figures for the financial 18-19 are paid in financial 19-20 are not reported in GSTR-9. This is because of this two-way insertion. The overlapping reconciliation will not arise. I will explain. In the last year, 2018-19, based on this press releases, you have not given the RCA liability in last year, 2018-19, Form 9. In your books of record, Form 9C, there is a liability. So there is a reconciliation arises. In your books of record, there is a liability. On your return, you are not disclosed. The reconciliation is that this is paid in next financial year. So as per the CBSE press releases, there is a reconciliation arises. Coming to this year, based on these two-way instructions, you are not reporting that figure in 2019-20 Form 9. So in your Form 9, there is no liabilities coming. In your books of accounts, there is no liability. So the overall reconciliation will not arise in this year 9C. This is related to the 18-19 reverse charge liability. Coming to the current year, reverse charge liability for the financial year 19-20 paid in the next financial year 2021. As per these instructions, values pertaining to the current financial year shall be reported in table number 4. Hence, RCA liability shall be reported in 4G. While following these two-way instructions, we have to report it in 4G. This will lead to differences in tax payable and tax paid in table number 9 of annual return. In the 9, the payable amount is more and the paid amount is comparatively less because the liability you are discharged in next financial year. So there is a difference in the tax payable and tax paid. There is a difference of this amount. Coming to the 9C. In the 9C, the tax payable in table number 9 is auto-populated into 9C reconciliation rate-based liability. In the books of account, also there is a liability. So there is no such reconciliation is coming as part of this liability of the financial year 19-20 paid in 2020-21. This is a second issue. And the most important issue is there is a confusion in table number 6. Once again reading this, in the table against serial number 6, the taxpayer shall report values pertaining to the financial year only. The values pertaining to the preceding financial year shall not be reported here. Always it is better for taking an example for easy understanding of subject. For example, in 2019-20, that is in current year, ITC is 70,000 rupees. In 18-19 previous year, ITC is 30,000. Total ITC is 1 lakh rupees. ITC available in GSTR-9 19-20 is 80,000. Why it is 50,000 relating to the current year and 30,000 relating to the previous year. What about the balance 20,000? That is the ITC of 19-20 you are claiming in 2021. So example is 19-20 current year ITC is 70,000. Previous year ITC is 30,000. You are claiming in 3B 80,000. That is current year 50,000 and previous year 30,000. At 20,000 is to you are claiming in next financial year. Then coming to filling the GSTR-9 before two-way insertion. Before the two-way insertion, how will you fill the tables in GSTR table number 6? Table number 6A, that is auto-populated figure is 80,000. Based on the 3B, that figure is auto-populated. In 6B, 6B means B2B supplies. That is also 80,000. 6C, 6D, in this example, you don't take. This is You think that this is an B2B supply. Then 6I, total of B2X. 6B, C, D, X, total comes to 80,000. Then 6J is the differences column. There is no differences because 80,000 you have given the breakup. In 7J, what is the figure? That is also 80,000. In table number 13 also you are filling 20,000. That is the ITC for the financial year 19-20 claimed in 2020-21. That's in part 5. Details of the previous year transaction 19-20 you have to declare in next financial year. That you have to given in table number 13. In GSTR-9 also coming. Table number 12. That is ITC availed as per the audited financial statement. That is in current year 70,000. From that you have to add 12B, that is ITC booked in earlier financial year, that is 30,000. Then reduce the 20,000 you have claimed in next financial year. So auto-populated total will coming, that is 80,000 is the auto-populated figure. Another figure 12E also auto-populated, that is the ITC claimed in annual return. That is a total of 7 J's coming. Then 12F unreconciled ITC 0. Before the 2A instructions, there is no much confusion. No differences in GSTR-9 table number 6J, and also there is no reconciliation in GSTR-9C. After the 2A instructions, how will you fill the form? 6A the same figure, auto-populated, which is not changed at 80,000. In 6B, instead of giving 80,000, you have to give 50,000 because ITC relating to the current financial year shall be reported here. The previous financial year 30,000 should not be reported here. That is the instructions giving. Total also 50,000. There is a difference of 30,000. Net ITC also 50,000. In table number 13, there is no changes. That is 20,000. ITC for the availed in next financial year also how to given. In GSTR-9C, table number 12, same figure 70,000. 12B 30,000. 12C ITC claimed in next financial 20,000. Auto-populated total is 80,000. But here is the difference. Table number 12B, ITC claimed in annual return, auto-populated from 7J is 50,000. There is a difference of 30,000. Difference is in GSTR-9, table number 6J, and also 12A for GSTR-9C. Unnecessary reconciliation comes as part of these two-way instructions. This leads to legitimate confusions. Now, another change is changes in reporting in table number 6B. 6B leads to invalid supplies B2B. 6C invalid supplies from the unregistered person liable to RCM. What is 6D regards to invalid supply from registered person liable to RCM. 6C and D is tells with the RCM. One is unregistered and another one is registered. 6C is import of goods. What is the change? For the financial year 1920, the registered person shall report the breakup of input as credit as capital goods. For giving the bifurcation of input services and capital goods, the capital goods condition should be a mandatory condition. What about other? And have an option to report, either report the breakup of the remaining amount as inputs or input service. If you have the data available, you should give as per input or input services. Or report the entire remaining amount under inputs only. This is a changes in table 6 for the input bifurcation. Table 8, on which date the table 8 figure is auto-populated? For the financial year 1920, today as on 1st November 2020 shall be auto-populated in this table. This is for information purpose. Table number 883 details. In financial year 2017-18 and 18-19, there is an option to upload the details of this table in PDF format on GSTR-9C. If there is any differences, the registered person has an option to upload a PDF format while uploading GSTR-9C. This is not specifically given for the financial year 1920. Hence, the option is not extended to the year 2019-20. That is the changes. Other simplifications for relaxation testing that in the instead I will tell other simplification of relaxation testing in financial year 17-18 and 18-19 continued. In 4B to 4E, outward taxable supply, option to fill net of credit note and amendments. 4B to 4E. In 5D means extended, 5E nil rated, 5F non-GST. Registered person shall have an option to fill all these details in extended rows. That is in table number 5D. These all are inserted in notification 56/2019 dated 14th November. That is continuing. In 5A to 5F, outward supplies tax not payable. There is also an option to give the net of credit note or debit note and amendments. Then coming to ITC part, 6B to 6C, there is a bifurcation of input. There is a changes. I already explained that there is a capital code split up is mandatory. Option to fill table number 6C, that is unregistered. 6C is unregistered. In 6D, that is registered. Instead of giving figures in 6C, you can give in 6D. That means that unregistered details you can give in registered column. Then 7A to 7H, ITC reversals. Expect reversal pertaining to Tran 1, 7F and Tran 2, 7G, that's a column. Option to fill all the details in 7H only. That is an option. Then 8B and 8D, details of entries in 8A to 8D. Option to upload the details of this table in PDF format in 9C. That is in early notification, you can upload the PDF format. Now this is not extended to the financial year 2019-20. Then coming to part 5, that is table number 12 and 13, reversal of ITC during the previous financial year and ITC available for the previous year. The reservation shall have an option for filling this table also. That is also continuing. Other simplification. 15A to 15A, details of refund. That is also optional. 15E to 15G, details of demand. Details of demand also, that is optional. 16A means supplies received from composition taxpayer. If it's a supply received from a composition taxpayer, you have to give an optional that is not needed for filling. 16B talks about the deemed supply from principal to job worker, that is also optional. 16C, deemed supplies for goods which were sent on approval basis, that is also optional. And the most difficult part is 17 and 18. HSN is outward and inward supplies.
There was a query for that table, 17 and 18, whether that exemption continues.
Yes, section
that is continuing. Yeah. As per section notification 79.
Okay. And also the form also this is changed. The form also there is a new form also that is instead of this way 1920 also continuing, that is in the new form. It is specifically given that. So this option is continuing. The most difficult is HSN-wise details of inward supplies. That is also optional for the 2019-20 because the inward supply details we are not giving in 3B because only the tax amount is we are giving in GSTR 3B. So it is very difficult if you provide. It is very difficult to give the details of HSN-wise details of inward supply. So that is also optional. And coming to changes in 9C, there's no much change, no changes in GSTR 9C. What all are the simplification and relaxation listing in the financial 17-18 and 18-19 continued. In notification 56, in part B certification true and fair view are substituted for the word true and correct. So that is also same. And also there is a mandatory for cash flow statement, there is a mandatory. For attachment, there is a, you have to upload the profit and loss account, balance sheet and cash flow. and cash flow statement to be reported only if available. That is also our changes in notification 56/2019 and other simplifications. In 9C also table number 5B to 5N, various adjustments for reconciliation between turnover as per the audited financial statement. 5B means unbilled revenue at the beginning of the financial year, then unadjusted advances. There's a lot of things coming. Turnover from April to unbilled revenue at the end of the financial year. All this you can give in 5O. 5O is adjusted in turnover due to reasons not listed above. While we are filing the GSTR-9C, we are giving an attachment, that is an annexure to this 5O. What all are the figures given in 5O? We will make a separate attachment while filing the GSTR-9C. That's our practice. In 12B, ITC booked in earlier financial year but availed in current financial year. That is making an optional. And also 12C, ITC booked in current financial year, that is also waiting optional. While we are preparing, we will give the figure. Because the thing is that if you are not giving this, everything will come to the reconciliation side. So we know how much is the figure which is taken in next financial year. So it is better to give in 12C, 12B figure. Otherwise, everything will come to this reconciliation. And also the difficult for an auditor is expense-wise ITC reconciliation. That is also optional. But it is better for giving a note in Part B certification. Based on this notification 56/2019, this is an optional thing. So the details of the ITC breakup as per the audited financial statement are not provided. That also we are giving. And also the other things we are always giving is that for the UDN also, the UDN we have to no option for giving it in the offline utility. So we are also giving a note for UDN also. It is because of this problems it's not possible for furnishing UDN in the offline statement. And we are also attaching an offline Part B report, that is certification. And the certification, we are writing it that it's a UDN. So given the qualification given is that you should read the offline certification which is prepared by together with the online statement. That also we are giving an attachment. That's all regarding the changes. Major changes in the two-way instructions. That is confusions created in table number 6. That is the ITC, and also the reverse charge liability for the previous financial year that is paid in current year. That is the major changes in GSTR Form 9 and 9C for the financial year 2019-20. Thank you.
Sir, any intervention? Now we can take up some questions also. We will discuss what all points we have covered in both the areas. Our prime intention was to cover the subject within these 2 hours, then take up the questions. I don't know whether we have finished in a hasty manner. I don't know.
Yes, we can start, sir. We can,
right. Okay.
Because those who are having questions on the subject are requested to raise your hand or please type in the question and answer session.
Sony sir has in between asked for a query. I saw it from the Q&A, but I don't know whether he wants to be discussed again.
Not in Q&A.
Somewhere I saw it, either in QA or chat box.
HSN-wise summary of outward supplies and inward supplies are mandatory or optional in table 17. And
that is not
And the notification is 79. I have only replied that also. But after that, I could not see that query. So it is there.
Any members, please type the question on the question and answer or raise your hand so that we can unmute and speak directly to the faculty.
One more thing is that, sir, was it speedy running through the provisions or because we know
it was okay, sir. We
it's
were
okay.
able to yes follow that one.
Yeah,
That,
the 9 and 9C, we only concentrated on the special changes because we know by filing 17, 18, 89, etc. what all are the basic factors. Now, what is the change as per the advisory and the notification 79? That is the only thing.
Sir, one request from Sony sir again. He wants to repeat the notification number. What
it is 79/2020. 79.
79.
Central tax dated 15th October 2020. 15th October. And probably by reading the notification, we may not be able to locate where it is described. That is a, but it's not directly answered. It is not directly answered in that.
Comment, sir, 1 second. Sir, there is voice coming. I think Bibin sir, you have to put it in mute mode. Then only otherwise. What one person has.
Now it's okay now?
It's okay, sir. Please, sir. Please.
Okay.
Sorry, sir.
So, notification number 79/2020 is a notification. Central tax dated 15th October 2020. There, if you look at on page, so many, it is not directly given there. It says that in para 8, in table, in the second column for letters, figures, etc., the particular, already that year mentioned there was 2017, 18 and 18, 19. Now, 19, 20 also shall be added. Okay. And Bibin has also shown in that table what all exemptions are again continuing. The table was giving that information also. That is table number 17 and 18. The option not to fill the HSN code still continues for 1920 also. That is it.
This is actually a rule-based changes. The changes in the rule. In serial number 11 in the set rule in form 9 in the table. That is starting. It's on page number. There's no page number. Anyway, notification 79/2020 central tax. The major changes in two-way insertions. The insertion of the two-way insertion is a major changes. Yes.
Sir, one more query has come from Soni sir. Okay, fine. He commended excellent your presentation, sir. Yeah, helping, very helping. Members, any other members who wish to raise any question, please type in the Q&A box or please raise your hand so that we can connect to you. Please.
Am I audible?
Yes, sir.
Yes. Soman sir, it was an excellent session. You have gone through all the aspects of the budget proposals and really important for all of us. And of course, your disciple, CA Bivin, also done a wonderful job.
Yeah.
I think the table which he has presented is very brief and very accurate, self-explanatory. Apart from this, anything is to be important points to be noted by the CAs while doing the 9C. As per your, according to you, anything is.
Only thing is that, sir, 9C, whatever possible we have to accommodate in 9. That is the practice we follow here. So everything accommodate in 9. We will discuss with the clients, or rather we ask the clients to discuss with us prior to filing the 9. So all the differences can be accommodated there, and our role in putting that reconciliation statement will be easy for us. Easy. In 9C, minimum reconciliation we were doing.
Okay.
And yeah.
In some of the cases, especially in cooperative societies, they are not paying taxes on all the services which they are running.
Yeah.
So they are in the view that it is not taxable, but without any legal background. So whether we should take any precaution while giving the 9C?
Sir, yeah.
Normally,
Recently,
I will explain you, in the cooperative
please.
societies, they are making the payment only for some of the services. The other services, apart from the interest, they are not making any payment. This is the background in which I am discussing this point. Okay, what is it?
Right, sir. Okay. Right. This 2 weeks back, we had a seminar for the society people in Kayangulam, that is nearby Kollam. So they were also aware that something is lacking from their side. That is all the society people. In fact, the registrar of the societies has asked us to give a lecture on the taxability requirement of the activities of the societies. The cooperative registrar has taken the initiative. And a number of people from different societies came there. People who are working there and the board of directors also were there in that seminar recently, 2 weeks back. When we explained these things, that is, there is no exception, as you said rightly, there is no legal backup that society should not do or should not show these items in the 9 and 9C and pay the tax also. There is no exception, except in the case of residential welfare associations, that we know that they have a minimum amount for their monthly contribution from the members. Except that, or all the societies are required to pay the tax on their other activities. Then one more exemption is there in respect of the interest they collect. That is exempted. So we look at the notification 12/2017, the exemptions related to the interest collection and the amount collected from the members by the residential welfare societies. Those only two, those are the things exempted. All other activities, being a person liable for, person in the sense I am taking the definition of the person. In the definition of the persons, any association of persons will come as a person. So the tax liability is there, sir. That we have already explained to that gathering. Then they also came to the conclusion that they need so many classes for that. So in fact, they were the societies across the state, they wanted to learn more on GST, and it is our part to make them aware that this is not a small thing. The government would be touching upon the activities, or rather the intelligence or the other people who are bound to, or who are rather taking steps to investigations and all. Societies also are not free from that activity. So it is a precaution, or it is an indication that societies are also under the purview of the tax department. We have to do that. There is no exception, sir, except these things.
So we have to report in 9C in the remark.
What else we should do? 9C, we have to. Because otherwise we will be in trouble, no? Yes, sir. Yeah, we will be in trouble. That thing also I have mentioned that. We have mentioned that we have to, that auditor cannot go back from reporting. He has to qualify these things in their 9C report. So they are coming to the what is that view, that they are also coming to the conclusion that it is required.
Why I highlighted this point here, many of our fellow members not taken this point seriously, and they given the 9C without giving any remarks.
Yes. So that is a precaution to be taken at the auditor level. So case to case, they have to, anyway, they should be aware that this is required. And in fact, we talked about the chitty societies, societies which are operating these chitty businesses. There also, the eyes are on the societies. The government is, rather the department, I do not know whether government, The central department is also looking into those aspects. The chitti companies, the societies who are operating the chittis in different method name, they give a different name, mutual benefit fund or something like that. They are also under their lens. That is what we come to understand. We have to, sir. We have to qualify that.
Thank you very much, sir. Thank you.
Yes, sir.
Very insightful
Nice
talk.
meeting you, sir.
Thank you, sir.
Right. Thank you. Thank you. Bye.
Any other queries, Vice Chairman? No other.
Yes.
Sir, I think Shambu sir has raised his hand and he's in the panel also.
Connect to him, please.
Hello, Shambu sir? Okay, it must be the sleight of the hand. No issues. Okay. Yes, sir. Finished. So,
Congratulations.
Sir, I think
Congratulations.
it must be the sleight of the hand. No issues, I would say. You can continue, sir. Sir.
Yeah, okay. I think he's somebody told in between. Some voice has come up.
No. It must be the sleight of the hand.
Okay, fine.
Okay.
So
It was me, Aryan sir.
yeah, okay. Yeah, sorry, sir. Thank you.
I just want to congratulate the new team.
Thank you.
Yeah. The first
Thanks,
program
and we
itself, excellent one.
request to give all the supports to continue all this, and also suggest for any topics which the members need to have more sessions and other things. Please.
Thank you. Okay.
Thanks, sir. Thanks for asking questions as well, because you made it as a very interesting. Soman sir and Shovin sir become, Bibin Joseph sir also interested to answer your questions as well. Thank you, sir. Thanks a lot. Yeah, Vice Chairman, can we conclude? And if there is no other...
Sir, please, you can just conclude and pass on this.
Yeah, okay. Before concluding, Soman sir, and with the permission of Soman sir and Bibin Joseph sir, I just want to give one announcement, one happy news which has come. Our SARC Best Branch Awards has come declared. Thrissur branch has secured second award, branch award, and Sikasa has secured first Best Branch Award.
Oh, great.
I congratulate the immediate past chairman, CA Anup G, and immediate Sikasa chairman, CA Anup V. Francis. Thank you, members. Regarding our today's seminar, CA Soman CL and his partners made a detailed analysis of amendments, penalty provisions, confiscation procedure, appeal time, and its procedures. What it is alarming is that even for small errors, department can penalize heavily. I don't know. We heard of a lot of things, easiness in business, and I think how easiness become uneasiness, department has to decide now. We have no choice. CA Bibin Joseph sir has detailed discussion on relevant columns of GSTR-9 and 9C. And also he has made a detailed discussion on the precautions, what to be taken while conducting the audit of that 9 and 9C, and the changes which is from previous years, how it is changed in current years, disclosures and all other things. And Soman sir has very passionately give answers to the questions, issues with the clubs, societies, and chit companies, how the implications on their business and other things. Okay. Thanks, Soman sir, Bibin Joseph sir, and Rajashekaran sir for giving such a wonderful session. I'm sure that all the members has benefit from the discussion, and thank you those who asked questions and thanks to all the members attended, and thanks to all staff, vice chairman and secretary for support. Thank you. Over to you, secretary, for official vote of thanks. Thank you.
Good afternoon, everybody. Am I audible?
Yes, sir.
Okay.
Yes.
Respected Chairman, Aryan sir, faculty of our today's session, Soman sir, and beloved members. We have just witnessed a fruitful session on the changes in budget in indirect taxes and practical issues in 9 and 9C. So I'm moving on to the formal vote of thanks. I take this opportunity to thank CA Soman sir and Bibin sir with the support of Rajashekaran sir, their senior partner, for enlightening our members and with their expertise, knowledge, and practical wisdom. Thank you, sir. Thank you very much.
Thanks.
Thank you, sir. Thank you.
Thank you so much. I congratulate and thank newly elected Chairman C. Aryan sir for making this webinar a great success and make it possible. Thank you, Aryan sir.
Thank you, Secretary. And
I also thank our Vice Chairman C. Ajit sir for support, for all the support. Thank you, Ajit sir.
Thank you. Thank you.
I thank all the members who have attended for this program, and finally thank our staff members who made this program very success, and support given by them is very grateful to us. Thank you very much. Thank you, all the best. Thank you and all the best.
Thanks. Thanks, Soman sir and Bibin sir. Rajashekaran sir.
Thank you. Thank you, bye.
Bye, sir.
Thank you.
Thank you.